Hello everyone, welcome again to Finance Bros. I hope you enjoyed my last video. In today's video, we'll be talking about some tips and tricks to buying your first home. Today's video is inspired from seeing how people are struggling to buy homes these days because of inflation, prices going up. And today's video, I'll be helping you figure out some options to purchase your first home. This video is going to be full of information, so take a seat, eat some popcorn, and let's get you your dream home. So first off, we'll be going through some tips that'll actually help you buy your first home. First off, we have the credit score. You need to start building your credit score from a young age, and this is going to allow you to get a better mortgage at a better interest rate, so you don't have to pay as much interest over the life of the mortgage. This will also show banks that you're a reliable borrower who will pay his loan back, and that's why they will give you a lower interest rate. Having a great credit score will also allow you to get many offers from different banks, so you can pick and choose which one best suits you. Next step is that you should make a budget for how much you're willing to pay for the home. First, you should be going to the bank to see how much you can actually take out for a mortgage, and then you should see how much of that mortgage you want to use to actually buy your home. A huge issue that a lot of people actually fall for when buying their first home is after they make their budget and they actually start checking out their homes, they start making changes like, oh, maybe we should get a bigger kitchen because might as well, or maybe we should get an extra garage or an extra room, extra bedroom, extra bathroom, maybe some renovations. You need to try to stick to your budget as much as possible and know how much you can actually afford. If you ever lose your job, this could put you in a lot of trouble with paying off your mortgage monthly. And not because you can actually take that big of a mortgage means you should spend the whole thing on a home. So definitely focus on making a budget to see how much you can afford. Step number 3, guys, would be focusing on actually trying to get as much money as you can for the down payment of the house that you want. And for this step, you want to rent a place with other people, or you want to have a lot of roommates, because this means you're not going to pay as much money, and maybe within a year or two this is going to help you get your down payment really quickly. The last tip, guys, and this is possibly one of the most important one that you need when you actually find a house that you like, that you'd like to put an offer on, or that you'd like to buy. Usually for this step you'd like to put in a condition on a house that you like, that if the inspection goes through, that the house purchase would also go through. And basically the inspection is really important because the person inspecting the house will go through all the paperwork and go through the actual house and double check it to make sure nothing is broken and everything is good before you move in. Because if something is wrong, you will have to pay a lot of money to fix that up, and it would probably cost you a lot more than an inspection would have cost. Usually one of these inspection guys would cost about $500, give or take, and these inspections go through the house really thoroughly. And I know this can be expensive, but it'll be a lot better knowing that the house you're buying has no issues to start off with. I've definitely experienced a bad side of this, and that's why I really recommend getting a home inspection. About 10 years back, my dad bought an apartment, which he did not get an inspection for, and about a month or two had passed, and the board said that there needs to be repairs, and he would have to pay for some of them, which I think added up to about 20 grand. But if he did do the home inspection, this would have came up in the paperwork, and this probably would have been avoided. But it's an expensive learning mistake for sure. Now that we've finished off with the tips, we're going to be starting off with 3 actual ways to get the down payment for your home if you're struggling or if you already have the money. Alright guys, so we have 3 options to buying your first home. First option, we have the classic saving for a down payment, and then you get a mortgage and then you pay for the house. And that's the most basic option that basically everyone gets. The second and third option are for people that are struggling to get the down payment. The second option is the rent-to-own agreement lease purchase contract, which I'll go through later. And the third option is rent-to-own lease option contract. Alright guys, for the classic option, the saving for down payment, it's obvious, save some money for the down payment as much as you can, maybe within 1 or 2 years. Or maybe try to buy a home that's within your budget to actually pay for it right away. And if you're struggling with the down payment, you could try to get roommates till you have enough money, or you could find a cheaper house like I said before. You could also try to find government programs that will help you fund your down payment, but for these you need usually some strict requirements, so you should definitely look into that if you are struggling with the down payment. And definitely do try to set savings aside periodically to make sure you're keeping up to date and to get your down payment within the right time. Alright guys, so next we'll be going through option 2 and 3 that I talked about before, and these are basically if you can't get any funding for a down payment, this is the next best step, and even if you can't get a government support program going. So these rent to own options are geared toward would-be home buyers who are unable to qualify for a mortgage. And this may be for a lot of reasons, like, bad credit, maybe they don't have enough of a down payment, or maybe prices are going up so quick that you just can't afford it at your current salary. A rent to own agreement is an agreement where you rent a home for a certain amount of time with the option to buy it before the lease expires. The rent to own agreement has two parts. Basically, it's a standard lease, like renting any place, and the option to buy it by the end of the contract period. Now, both these options will need a mortgage secured by the end of the contract period, and this contract is going to be made by the seller or by the person renting you the place. In both options, you will have to negotiate the purchase price by the end of the contract, and you'll also need to negotiate how much of your rent is going to your principal of the house. For example, if you're paying $1,000 per rent, you can negotiate with the landlord that maybe $500 would go through to the actual purchase of the house. And this is going to take a lot of strain off you for actually having to pay the huge down payment, and it's going to help you build a lot of equity in a house that you're just renting. You will also need to negotiate who takes care of the maintenance of the house, because this usually falls on the buyer of the home, but since you're renting, you could probably negotiate it enough that you don't have to pay the whole amount, or maybe the landlord can take care of it until you actually purchase the home at the end of the contract. The rent to own agreement is a great option if you want to own your own home, and this is going to give you a chance to also get your finances in order by improving your credit score, helping you save more money, and helping you build equity in your future home. Now, everything I've talked about for the rent to own agreement is a commonality between the two options of the rent to own, but now I'll be going through each one and the differences between both. So first, we'll be going through the rent to own agreement lease purchase contract. Basically, you will be using this contract specifically if you're 100% sure that you want to buy the home by the end of the lease. In this option, you're legally obligated to purchase this home by the end of the contract period. Unlike the rent to own option contract, which we'll discuss after this, in this option, you really want to be 100% sure that you want this home, because if there's something they don't like later, or if there's any issues with the house, it doesn't matter because you'll still have to buy it since you signed the contract. The second option is the rent to own lease option contract, and this is a great contract if you're not 100% sure if you want to buy this home in the future. Basically, you can change your mind, and that's exchanged for a few $1,000s that you pay to actually be able to have that option to not buy it by the end of the contract. The only downside to this agreement is that if you don't buy your home by the end of the contract period, you do lose the money that you paid for the option, and you also lose any money that you put towards the house through your rent. But normally you would have paid rent anyway, so that's not really a loss. Your only loss would be the payment for the option. This is a great strategy because it gives you the right but not the obligation to actually purchase a home by the end of the contract. And this is going to give you a lot of flexibility because you're not forced to actually buy the home by the end, and you can decide to just walk away. The only thing that you would lose would be the fee that you paid for the option. So just to summarize, guys, I'd be going through the three options that we just went through. First one is simply saving for a down payment. This is the most basic one. You save for a down payment, you go to a bank, you pay it off, you get a mortgage, and you're good to go. The second one, like we talked, is a rent to own agreement lease purchase contract. Basically, you enter a contract where you have to pay rent, and by the end of the contract period, you will have to purchase a home. And for the third one, we have the rent to own lease option contract. This contract is better than the last one because it's flexible, but you do have to pay a fee for the option to be able to walk away by the end of the contract. If you're interested in learning more about both the rent to own agreement lease purchase contract and the rent to own lease option contract, I leave a link down below for you to check out. I'll also leave another link down below that talks about the pros and cons of both the rent to own agreement lease purchase contract and the rent to own agreement lease option contract, so you can pick between them and see which one fits you best, because depending on your flexibility, maybe you prefer one over the other, and this is going to help you long term for actually purchasing your home. Thank you guys so much for watching another one of my videos and actually taking the time to listen to everything. If you guys have enjoyed my video and it helped you in some way, please like and subscribe. If you have any questions or feedback, leave them in the comments down below. and I'll get back to you as soon as I can. If you have any video ideas or topics that you'd like me to make a video on, please also leave that down below, and I'll see you guys on the next episode.